Hey, it's Dusti Martin with Platinum Living Realty dropping in to give you your monthly market update for the month of November for the city of Scottsdale. It's currently November 3rd, 2022. Let's just dive right into it. Oh, before we get started, do me a favor, hit that subscribe button. All right, so let's get right to it. Our active listings are up 155% over this time last year. These are some numbers we are getting used to over the last few months of hearing, with our inventory being way up over what we had this time last year. And that trend is probably going to continue well until the Fed, I'm guessing well into next year, because come, January, February, March in Arizona, we did not have hardly any inventory until the end of spring, beginning of the summer. And then things kind of shot off. I think the Fed's raising interest rates woke a lot of people up. So like I said, our active listings are way up, but our sold listings are only down 36.9%. So in comparison, our active listings shot up, but then our sales only came down a little bit in comparison. So this time last year, we had 662 sales in Scottsdale. This year, we closed out the month of October with 418. So about 200 sales less. That is a big drop, but also you have to remember there's a lot of people who wouldn't normally have been a home buyer last year that were home buyers simply because the interest rates were so low. So there's a lot of people who would have never otherwise been a buyer who were, and now we're returning more to normal. Our median price per square foot, though, is still up way high, 10.8% over this time last year. It's not as high as it was last year, but again, like I said, I've been saying this for a few months. 2021 was the hold my beer of real estate. And so we're still way up above a normal trend. A normal trend would be somewhere between 2 to 4% nationwide or 3 to 5% here in the Valley. And the feds have already said that until we can get inflation to come down to about the 2% range, and that's overall for the economy, not just housing. If they can't, they're going to keep raising rates until they can get to that 2% mark. And as we just know, yesterday they raised the rates again because inflation was still over 8%. So I would expect a lot more rate increases before we see decreases. Everybody's already talking about rate decreases and just refinance in a few months or a year or whatever, but that's not guaranteed. We know historically rates can go as high as 18%. So has it happened in the last 50, 60 years? Once, but at the same time, it hasn't happened since. So keep in mind, while this 7% type scenario now is jolting for a lot of people and it's scary and it's a huge wake-up call, a lot of other people should be keeping in mind that it could get worse. It's not guaranteed that it'll get better, at least not until the feds can get inflation under control. Meanwhile, housing is still actually outperforming. So our average home values, our price per square foot, is up over 10% over this time last year. So that is still great news. Our months of supply is up again, 304.5% over this time last year. We're currently sitting overall for the city of Scottsdale at 4.34 months of supply. That's about a week and some change, not quite 2 weeks outside of seller market territory. So the city of Scottsdale, for the first time in a long time, as a whole, is no longer in a seller's market. But if you're wondering what that means for you in your home, in your price range, or in the home that you are hoping to buy, wait till the end. I will cover everything by price point because not all price points are the same. And it is very, very different between a $100,000 home and a $3 million home. Our median days on market is up 81.5% over this time last year, but we're still only sitting at 49 days on market. Now, once we get to that 6 month of inventory, even stable market scenario, once we creep towards that, we should see in a truly even stable market, we should see a average day on market of about 90 days. And I know that sounds crazy that it would take 90 days to sell a home, but in a truly even, stable market, that's how long it should take. And we're still a good clip off of that. So the moral of the story is it's not that homes aren't selling. It's that people are overpricing their home. And once that home gets down to a price that is reasonable for today's market, it sells very quickly and closes very quickly. So the key is to not be outpricing the competition, not to be pricing in line with or above the comps, because we are not there anymore. We're more flat with where we were in January. However, you can't be overpricing your home. You should be pricing right at, or in my opinion, right below the comps, and expecting to sell for about 97 and 98% of the list price. If you bought over the summer or even just 6 months ago, you are not going to get that amount back. You are going to be lucky to break even. I would suggest for this month, pricing about where things were in January. And I don't mean aspirationally pricing in January. I mean, what did things actually sell for in January? That's what I would be doing. All right, so let's jump over, like I said, to our months of supply by price point. It's always a whole nother ball game. So the good news is we actually have inventory for the first time in a long time in the $0 to $100,000 price range. From $0 to $100,000, we have one listing. It hasn't sold yet, so we don't have anything that we can actually calculate. So we don't have any data yet. But the good news is there is something, where last year there was nothing. So there was nothing to calculate last year, but that's because there wasn't any inventory. The $100,000 to $200,000 price range this month is at a 3.5 months of supply. That's 2 weeks inside seller's market territory. I would be shooting for one good showing, maybe 2 a week if you're looking to sell. And I would expect maybe one serious offer in that first 30 days. Probably won't be list price, but you should be, if you're getting 1 to 2 showings a week, and you should be getting at least one offer at that point. Then we get to the $200,000 to $300,000 price range. We're at just under 3 months of supply at 2.93. Same scenario. You want to be shooting for about 10 showings in a month and one strong, solid offer in that price range. Then you get to the $300,000 to $500,000 price range. You're at just over 3 months of supply. With that said, same kind of scenario. You're looking for one good offer in that 30 days. And like I said, you need those 10 showings to show you that you're at least in the right ballpark. Then we get to the $500,000 to $700,000 price range. We're at 3.88. Again, just inside seller's market territory. You're not going to see, now a seller's market, a lot of people have come to think means that you're giving away appraisals and you're not doing inspections and stuff like that. And that's not the case, except in rare scenarios. But it does mean that sellers are going to see close to list prices, try 97, 98, 99% of list price scenarios when it comes to purchasing their home. Then we look at the $700,000 to $1 million. You're about a 1 week step outside of seller's market territory at 4.22 months of supply. Again, you need to be pricing just below the comps, right in line or just below it. And you want to make sure that your house has the best marketing, has the best curb appeal. You want to make sure it's the pretty one on the block. And then we look at the $1 to $3 million range. We're getting close to an even stable market there at 4.83 months of supply. So it's not all bad. It might lean a little towards the seller. However, it's not technically a seller's market anymore. It's going closer to being a even stable market. So like I said, don't be pricing above the comps, and be very honest with yourself. If you were a buyer, would you pay, what you're asking on your home when you're seeing other homes around for the same price or maybe a little less? You need to be very cognizant of what buyers are really thinking right now. They're thinking, I'm not paying list price, and I'm not paying what somebody was going to list it for in March of this year. It's not happening. Then we look at the $3 million and over. This is the only part of Scottsdale that is truly in a buyer's market at 9.25 months of supply. It is a buyer's market. Like I said, anything 8 months or more is a buyer's market. You really, really, really need to be cognizant of not overpricing your home, and you want to make sure that you're pricing at the lower end of those comps. And when I say comps, I don't mean something from 6 months or 12 months ago. I mean something preferably in the last 30 days, if not the last 90 days. That's where I would go with that. This is a little bit of a shift because last year, this time, the $3 million and over price range in Scottsdale was actually just over 5 months of supply. So this time last year in Scottsdale, it wasn't a seller's market over $3 million in Scottsdale, which if you've been watching this channel, you know happens a lot here. It's not uncommon. But at the same time, with interest rates going up the way they have and the fact that they're going to continue to do so, as says the Fed, we know that this market is going to shift a little differently. And so we went from an even stable market last November. Now we're clear into buyer's market territory. So it's mostly shifted the 3 or 4 months of supply that the rest of Scottsdale. So last year when we had Scottsdale supply at, 2 weeks of inventory and on the high end, maybe a month worth of inventory, add 3 months to that and you've shifted it about into where it would be. Things that were in a seller's market might be borderline, and things that were borderline seller's market are going to be even, and things that were even market last year are going to be buyer's markets. If you're wondering what your home would sell for or what you should expect when you're looking to buy a home here in Scottsdale, go ahead and give me a call at 480-717-9405 or visit my website at dustimartinrealtor.com.